Anyone who has watched the movie The Big Short will know that Michael Burry is the king at making money in a stock market crash. The 2008 financial crisis, well, let's just say he made a lot of money. Now, I don't know if you guys have been paying close attention to what Burry's been doing or saying, but it has got us investors slightly concerned. Let me update you. Burry said index fund inflows are now distorting prices for stocks and bonds in much the same way that CDO purchases did for subprime mortgages more than a decade ago. The flows will reverse at some point, he said, and it will be ugly when they do. Like most bubbles, the longer it goes on, the worse the crash will be. So, as you would expect, after reading Burry's comments on the market, that got me interested. What is Burry himself actually doing when it comes to his own investments? What I found was fascinating. I want to show you this. So this recent quarter in 2020, Burry made 34 different stock moves. Now some of those moves were minor. We're going to look at his 8 biggest stock buys and his 8 biggest stock sells. Basically all of the important ones. His largest stock sale was Jack in the Box, ticker symbol JACK. That's obviously the American fast food restaurants, and Burry got completely rid of that position. He sold all 300,000 shares worth 12.24% of his portfolio. His next largest stock sale, let's just say Mark Zuckerberg would not be happy with. He got rid of all of his Facebook shares, which used to make up 11.65% of the portfolio. The 3 positions that Burry reduced and did not completely sell out of were 1. GameStop, where he sold 8.44% of his portfolio worth, 2. Qorvo, 9.11%, and 3. Maxar Technologies, which was 9.48%. So he reduced them by a lot, but he just held on to a couple of shares as well. The last companies that he sold completely out of were Boeing. There's no real surprise there. Taylor Brands, a company which Jeremy from Financial Education used to love, and Michael's company, the provider of art and decor items. So there you have it. He sold almost 75% of his portfolio and he's completely allocated it into other investments. It's a move that a lot of stockholders would be afraid to make, but Burry's never going to back down on what he thinks is right. A lot of those companies sold were American retail or food companies, the likes of Michael's, Taylor Brands, GameStop, and Jack in the Box. But he also wasn't afraid to get rid of technology type companies like Qorvo and Facebook. Which does lead us on to a very obvious question that you should ask me. If he sold so much of his portfolio, what did he replace it with? And what I'm about to show you, I think you're going to find very interesting. Out of his 10 biggest stock buys, 7 of those were call options. Now, I don't know if you guys understand what a call option is. I'd say probably 50% of you do, but for those who don't know, let me explain. A call option gives the buyer the opportunity, but not the obligation, to buy a certain stock at a fixed price. And of course, you have to pay a certain one-off fee to be a holder of a stock call option. If a stock goes up, you profit from the call option, and if it goes down, well, you just lose out on the small fee that you pay. So Michael Burry, his biggest stock buy so far was a call option in the stock Alphabet, or Google as it's more well known. This means Burry paid a one-off fee to be an owner in the call option, and now he can buy Google at the original price he agreed upon. If Google goes up, like it has done a lot over the past couple of months, Burry makes a ton of money. If Google falls and there's a massive market crash, well, Burry just loses the small fee that he paid and he doesn't have to buy the stock. Basically, what these call options do is it allows you to profit if the stock market continues its run up, and it minimizes the downside to a massive extent. I think these call option purchases from Burry, it's such a smart decision. Let's take a look at them all. His biggest move by far was the purchase of Google stock, which he bought 80,000 shares in, accounting for 35.9% of the portfolio. Its total worth was $113 million. So if we take a look at Google stock, ticker symbol GOOG, what's happened to it? Over the past 6 months, it's absolutely shot up like a rocket. It's almost up by 60%. So Burry's already made a lot of money from this Google purchase. If this pattern continues and the stock keeps going up, Well, Burry will make a lot more money because he can exercise his call option, which he bought at a much cheaper price. However, if there is a market crash and Google/Alphabet stock goes down, Burry doesn't mind too much because he can choose to not exercise his call option, and the only thing he loses is the small fee he paid to buy it in the first place. This is the reason why I think Burry's strategy is so smart in this particular market that we're in, because it minimizes the high potential downside risk that there is. Right, let's keep going through his other investments. His second largest investment was a call option in the stock Facebook. Now that's very interesting because those of you who have been paying attention will know that he sold his Facebook stock. So he specifically wants to own call options in the stock instead of buying the stock outright because, as I've said, it minimizes that downside risk with each stock. His third largest buy is a call option in Booking Holdings. Here he bought 5.86% of his portfolio worth. Then Goldman Sachs, the bank, another call option making up 4.6% of his portfolio. And Western Digital Corp makes up his fifth largest buy, 3.8% of the portfolio worth. So guys, his top 5 largest investments were all call options. He did not choose to directly own the stock, but instead he wanted to minimize downside risk through those calls. That's very interesting to me. Okay, then Bed Bath & Beyond came in at number 6 in terms of size. Discovery and Trip.com were 7 and 8, and these ones were all stock buys. They were not call options. Number 9 and 10 were call options, both banks, Bank of America and JP Morgan, rounding up his top 10 largest stock buys for the recent 2020 quarter. So I've got to be honest guys, I've looked at a lot of different investors' portfolios and I gotta say I haven't seen anyone use this tactic before. I think it's so smart to use. Call options. Let me show you why. Okay, the market, whether you like it or not, has been on fire recently. At the time of making this video, it's gone up just over 50% in a matter of months. Burry sees this and he sees prices at all-time highs and he thinks, what tactic can I use? Because I don't want to miss out on these returns, but I also don't want to lose a lot of money when/if the market crashes. So what's the most obvious decision? Of course, the tactic is call options, because if the market keeps going up, like it has been doing, Burry exercises his call options and he becomes an owner and he receives those ridiculously high returns. If the market crashes on itself, like a lot of investors predict, well, Burry simply doesn't exercise his call options and he doesn't lose a lot of money. The only thing he loses is the original one-off fee that it cost him to buy the call options in the first place. Smart investing, I'll just say that. But here's something that I need to tell you, and it's very important that you pay close attention to this. Michael Burry does not have to disclose his short positions. He only has to disclose his stock buys and call options. So if you remember the Big Short movie where he puts a massive short on the housing market, yeah, if he has a comparable position today, he legally does not have to disclose it and tell everyone. So that's something we need to keep in mind going forward. Burry probably has a bunch of short positions right now that we don't know about, and we will never know unless he comes out and tells us directly, which I highly doubt he will do that. He's going to keep his cards under the table and then maybe tell us after the fact. Nevertheless, we need to pay attention to what we do know. What we know right now is that Burry, first of all, he sold a lot of stocks. 75% of his portfolio he got rid of this quarter. And then he went and bought a ton of call options. This gives him the option of being a stockholder at a particular price, but it minimizes his downside dramatically in case of a crash. I gotta tell you, Burry is so calculated with his decisions. It's all about risk and reward. Minimizing risk, which call options do to a great extent, and maximizing potential reward, which Burry also has managed to achieve. In this weird market that we're in, there is so much that we can learn from the way Burry is playing the game, because we want to win, no matter where the market goes, and Burry's doing this with the way he's organised his portfolio.